have Mr. PV Vijaykumar, who is the Head of Finance and VP at NCC Ltd. Thank you so much, sir, for joining in with us this afternoon. And firstly, I want to start with the first question coming in, which is on the back of announcements, based that we've seen coming in on the exchanges, and that is the order worth around 6,388 crores were announced during this quarter. But the number given in the release is much lower, of around 4,460 crores. So is there any specific reason behind this? And with the order wins of around this 4,400 crores in Q1, what is the order inflow you're expecting also for FY23 now?
Good afternoon. Thank you very much for inviting us. You see, the number varies because we have bagged wastewater treatment plant execution in Malad, Mumbai, which has got an EPC component of 3,833 crores. Apart from that, there is a venom component of 1,854 crores. So this venom component, it needs to be performed over a period of say 15 years or something like that. So this is technically removed when it is reporting is done. So that's how the number looks like, 4,456.
Right. Good afternoon. This is Cheryl also joining in the conversation. And post your Q4 results, actually, you all refrained from giving a top line and margin guidance for FY23. Would you like to give some guidance now post your Q1 earnings? Have you penciled in some sort of a target for your revenue and margin guidance?
You see, considering macroeconomic conditions, global financial markets, and uncertainties in global commodity prices and all that, the escalating tensions in the country, internationally, our board is mulling over what should be the appropriate guidance we should share with the investors. However, so far we haven't crystallized completely what should be a specific number that would indicate the top line or bottom line. But personally, I would feel if you look at the run rate, I think we are at 3,000 crores, and previous quarter also it was 3,179 crores. So looking to this run rate, 15-20% should be a decent growth what we can assume as of now. However, hopefully we should be able to share some certain number specifically in going forward.
Okay, keeping an eye on that. But, sir, I do want to ask you one thing is that on your margins, now quarter-on-quarter basis, your margins have expanded by 100 basis points. What is the reason for this? Any specific reason? And, what should we be looking at in terms of, was it completely because the commodity prices have cooled off as well?
No, there are mainly two reasons. Yes, one reason what you said is right, absolutely right, because there is a mellowing down of the commodity prices, which we are seeing this quarter. The Q1. However, apart from that, there is an increase in the turnover also. So these two reasons which have contributed to the improvement in the margins.
Right, and let's talk about your net debt. You managed to reduce it to about 1,200 crore rupees. What sort of a target have you set for FY23 when it comes to debt reduction? Where do you see that number now?
See, the debt has come down from 1,184 crores to it has come down from 1,936 crores to 1,707 crores compared to last year quarter. There is a reduction of 230 crores. Since I don't have to give you a specific number in terms of the forecast, what I would like to share with you is this. There is an efficient working capital turnover that is happening in the company now. Going forward, there is a quite possible reduction in the debt to the same extent.
Right, Mr. Vijaykumar. We leave it there then. Thank you so much for joining us on the show, talking about the quarter gone by for NCC and where you see it going ahead, where you see the debt figure, as well as your margins in the year, in this year itself. That was Mr. PV Vijaykumar.